Let's go over to this Euro USD daily time frame and let me show you how you should be using the imbalance zones in your trading. So let's start from this area and I'll show you step by step. Now you can do this, you can back test this as well. In fact, we'll actually do that on a replay ourselves. Let's go replay. Yes, I know it's going to be hindsight because I know some of the price action, but this will give you a better understanding. So let's just go forward by candle. Right, I want to see a break to the upside. So there's the first break to the upside. We already know, understanding that you have to understand market structure here. You can't just use this blindly. So we had just the close above this high. It puts us into a bullish bias. That means any pullbacks into areas here of potential demand, we expect market to run this high. So how can we look for potential trades using those imbalance zones? We're looking for the next area where we see an area formed. So as we see this candlestick form like this, let's go close in the daily. What we can actually do, we can actually look for trades here on a lower time frame. Let's just study this on the one time frame for today, and we'll study it on a one candle by candle basis. So we're looking for the next candle to come back and to hold within this zone. We want to see it hold at 3 different places. When we're using an imbalance zone, we either look for it to hold at the high of the zone, the 50% of the zone, or the low of the zone. Now we do not want to see it close through. We can see a wick through, but we cannot see it close through that zone. So let's go to the next candle and see what happens. Okay, so we've closed through. That's invalidated this zone, and we would not now look to use this as a potential zone. Now, the lower time frame, you was probably seeing a push up and a straight push through here. Now, we need to wait for the next candle to show us a close below the previous candle's high or low. So again, we haven't got anything, nothing. Okay, so now we've pushed up. So we have broken structure, and now what we have a new potential strong low in the market and waiting for a pullback for a potential weak high. But what we can do here, we can mark out this as our next zone. And what you're looking for is the market to pull back into the 50%, the low to hold for continuation. So again, we've pushed straight through. Okay, we've closed through. So that's invalidated this. And we look for the next one to form. So we form one to the downside. Now, what this can now help us with is we know we're bullish here, and we know we're looking for continuation now to do what? To target a weak high. So we are coming into areas here of potential demand. So we could draw an area of demand like this, potentially an area of demand. Let's put this as a daily zone. And we could look for the market here to just wick in and push out. Now, in reality, this is our last sell to buy move. So we could actually say this is a full demand zone. So anywhere here, we could see a reversal. Now, the best place is to look for this zone to hold just for a wick to downside and a bullish candle. That would give me a buy. So we've just about closed through and we've gone into the zone below. Okay, so we can just see we've left this zone here. A bullish candle now gives us a reason to buy, but we've already had this candlestick. Not only has it gone into our area of potential demand, we've just made a sweep of this low. And this is actually, to me, a very good time to take a buy. Let's just see what happens. Indecision candle. Let's zoom in. Hey, look what's happened here. We've held, okay? We've made a higher high, higher low, and we've held at this imbalance zone. A very good sign that potentially we could see the market want to go higher. So what I'd actually do here, I'd actually place a break above this high. And then I look to target this high. Now, obviously on the lower time frame, I'll be looking for lower time frame entry here. That's how I'll be looking for a trade. Hey traders, we'll get back to the video in just a moment, but I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. So we've got the push up, okay? This is perfect. Now we can see we've got that directional bias again with the imbalance zone. We've created the next zone. We're looking for pullback in the continuation. So what we're doing, you see, we're looking for entries understanding where we're looking for entries, how we're looking for them. We're then going to use these to make sure we're going in that right direction. And we can look for adding our positions by using these zones on the lower time frame. So this isn't a good sign, not a good sign at all, because we've actually closed through that zone again. So this potentially does indicate we could want to push lower to look for another low here in the market to potentially push the market higher. Let's just see what happens. And there you go. See how easy it is to call those areas. Let's just move this. So that would have been a losing trade based on that. And we were looking for this high to get run. So we still have this as our strong low. Okay, no reason to change that. What we've got now is this wick through. And like I said, once we saw that close of that zone, we knew that the market was going to take that low. Potential new buy to the upside because we've wicked this low. So you could look for a breakout trade above that high. But let's just wait for the next zone we're looking for. Okay, so we have one here. So let's say you haven't taken this buy on the lower time frames here. You've now seen this zone. This is where you can drop down to lower time frames and you're looking for an entry to hold off this level, and this low. So you can get a quick pullback, continuation. Okay, that's the sort of thing we'll be looking for in the lower time frames. Now you can use whatever you wish, but you can see here how the market is held at this strong low. And we have a pullback and we just hold at that high and we run that weak high. Now again, look, we do the same thing. We create a new zone and we look for the pullback to add into our positions. We have a pullback. Now we are above this swing high. When we want to be using these sort of entries, we want to be doing it down here as close as possible as you can where we're seeing that move coming from. Okay, so this could potentially be a new high to pull back. And we come all the way back to this area here of potential demand, areas of imbalances. Let's just go forward another candle. Okay, so we can actually identify, I'm actually just taking that off, put that back. We've now just held at the low of the zone. Okay, we've closed back above the 50. This could indicate another push higher. We've done the same again. We've wicked through the low. Okay, we've held at the low of the zone. But now things have changed. Okay, this looks like a swing pullback. And all we're looking for is the close of this bottom of this zone. We're actually holding at the bottom of that zone. And we just created a new potential zone. So the lower time frame here, you could say this is a potential swing pullback. Okay, and you'll be looking for this weak high to be hit. And that means that this is the breakout point. This becomes your new strong low down here. And we just mark this out. And you could use this as an area of demand. Now, in theory, it should be the last sell to buy move. This would be your zone of demand. Anywhere here, if price comes in this zone, you can see a reversal. We're at that area right now. But if we can find that to this area, okay, that's roughly where we'll be looking for market. But we can look now here for an entry on lower time frames. Understanding this zone, we can see a pullback into the area of this zone for continuation for this high. And there you go. Okay, so we can see how the market is pulled back to the full fill of this zone. Okay, this is not what you've been taught. Everywhere else, you'll find that you're waiting to mark up these zones like this after this candle's close. You don't need to do that. If you understand the momentum coming in from this bullish candle, that's where those buys are coming in. You need to understand the body of these candles. So look at that. You could have caught this trade on lower time frame. So you really want to be going down to a 15-minute to 1-minute entry here to look for these types of trades. So now that leaves us, okay, this new zone where again we can look for pullback. But what have we now done? We've now broken out, okay, and we've created a new strong low, a new area here of demand. So we're expecting a pullback. That doesn't mean it's going to pull back straight away. So let's just see if we get a pullback. We can still look for buys here, but you need to have it in the back of your mind. You could expect a pullback. So we've got a single candle, indecision candle, and then we get a sweep of the low, and we've continued higher. So we now put in a new zone. Now we know this has actually swept these lows into this zone. So that's a valid area. We could have potentially found a sweep buy, okay, on the lower time frames. Let's go forward. Again, look at this. We hold at the imbalance. Okay, another potential area you could have taken a trade. Not saying you're holding these trades for long periods of time. You'll be looking for quick in and out profits here on the lower time frames. Now we've got a first sign of a reversal. See, we've just closed, I believe. Just bring this zone down. Okay, so our zone is actually from the high of this candle we've closed through. That shows us a potential reversal. So we don't really need this zone there now, but this does show me the potential pullback. So this is the potential area where we create a swing high and we could see a pullback. Let's just go forward and see if we break out again. So we have broken out with this candlestick here. We create a new zone. Okay, we've also just gone through this old zone as well at the same time. We've broken straight back up. So let's wait and we put in a new zone. So this shows us, okay, what this is showing us right here is that this high swing low is a small area where we create a new strong low, okay, potential weak high. What I wait for is the breakout of this high to confirm this. So we held at this new imbalanced zone. You can see we just wicked through and we continued higher. And we actually came back to test it again. But if you look closely, we did have this zone here, which held price, and we've broken out. That now gives us that breakout, which then gives us a new area of demand that we can draw. Now, again, it would be from this high. This is the last sell to buy move, but we're just for this purpose, we'll mark it like this. We then mark out a new area of imbalance. And once again, this is our strong low. This is our breakout. This is our new strong low. This is our push up, pull back continuation. Okay, this is our breakout. You'd now be looking for a pullback at any point now. As soon as you have that breakout, you can look for that swing pullback. So let's continue with the next candle, looking forward to hold. Okay, so we've currently held within that zone. Now we've broken through. Now that looks more like a full swing pullback. And the size of that candle looks like to me we're going to just not pull back. We're going to run this demand, perhaps run this low, and we could even take out all of this and full reversal. Let's just see what happens. See if we can hold at this. We've actually wicked through, so that actually removes this area of demand. Now what I didn't draw was this zone that we should have had marked out. We can see price held at that zone, and we've continued to push away from it. And we do have another one there that I didn't draw, a very small one. And you can see the market has held at that zone and pushed lower. And again, we do the same here. So right now we have a bearish bias. Hey, we continue with that bearish bias. We're not concerned really that much about this previous zone here. The reason being is because we're going with current flow of price here. The only thing we were concerned of really was this area of demand. Even this old demand here, well, not concerned about this demand zone. We're just concerned that it's there where we can see a bounce from. We're not concerned to take a buy off it. Okay, let's just bring all these in. Let's bring that in properly. All right. So again, we have another zone. Let's see what happens. Great. Now we reversed it. What does that signal? That signals, okay, this drop to downside, potential pullback. Okay. So again, let's just get rid of these old zones. What do we have on the pullback? We do have this as our last, okay, buy to sell move. We now have, this is a potential strong high. This is our breakout level. So you'll be looking for a pullback. Let's have a look to the area of demand because we don't have anything else up here. So we don't really need to use this zone because we broke it. Okay, we're currently just sitting stationary. We're waiting for a breakout. Here, ours is a breakout candle to the upside. So now we're looking for a pullback into that to target up. And there you go. We have a pullback into that imbalance. We hold the balance and we push up for the area of supply. Again, on the lower time frame, you could have caught a quick buy here for that day. And it's all about understanding these candlesticks, okay? Understanding the body of the candle. Let's go forward another candle. And now this looks like a strong push through. And again, that we could draw this one off, but we didn't even we got a very tiny little pullback there of the day. You may not even seen that happened over the perhaps Asian market, and we pushed up strong. This does look very bullish, and it looks like we're going to run this area of supply. But look, we push back down. Okay, and what do? We close this zone. So we close this zone, which gives us a bearish bias out of this area of supply. But it's an inside candle at the moment. Let's just go forward. We're holding inside. I believe that this still looks bullish, even though we took out this zone. Okay, because this is an inside candle. If we were to run through the highs first and then did this, this would have been a much better looking sell signal. Okay, so we've now got bullish movement again. So again, we can now look to buy this to run this high easily. So we pull back, we've held. So can we now see a push higher? We do. And we haven't quite run the high, but we create a new zone to trade off to push higher. And we tested the 50% and we took out that high. So it's invalidated this zone, and there's a potential breakout, which then gives me a new strong low here in the market, and this will be my area of demand. Okay, now let's see if we can continue higher. And we continue higher, and there's a push away. So now we've broken out, we expect a pullback. Okay, but we've got this zone where we can continue higher here. Let's see if we continue to push through. We pull back into the zone and we've invalidated it. So now this shows us a potential pullback. Okay, we could come all the way back to zero demand. Let's see what happens. We got a new bearish bias on that candle. Now we have broken structure. We're expecting a pullback. This will be the area we'd look for. Come back to area of demand. Look for swing lows. We don't have any swing lows on the way back here at all. So there's a big push. There you go. We were looking for that pullback. We got a little push up to the 50% of that imbalance. Great trade we could have had on that day. Okay, so we got a nice sell to the downside, looking for the market to head towards this area. Now, we have no reason for another bullish move here, but we are still bullish because this is our week high. Okay, this will be our new week high. We want to see the market run. This is our current strong low. So we were looking for the market to come back here for a potential buy. We're currently selling now on those lower time frames. We're looking for another pullback into this zone. So there is a small pullback. Now it's held kind of in the middle. We really want to see it hold close to that first level or the 50%. Let's see if we get another pullback. We have got a smaller pullback, and that's a better looking candle. See, we've come back to test the 50% this time. So that looks more like we could see a push through the downside from here. And we inside candle, again inside, very inside. And we may have just come back to test that 50% once again. Let's just mark this across. Okay, yeah, so we're back at the 50%. We just need to see that expansion away. Okay, so there's our expansion away. That leaves our new zone. Again, we're looking for a pullback into this zone to target down to this demand. So that's a bullish candle pulling back. Perhaps we can pull back to that 50% now. There it is. Now you can look to target this area of demand on the lower time frames where we're looking for those trades, obviously. And we believe we've just gone a little bit deeper, swept those highs. May have been a loss for the day there. We're going a second chance entry on that candle, and we've gone even higher. Okay, again, holding at that 50% area of this imbalance. Now, sometimes you may find here in the lower time frame, you may have losing trade, but it all depends what's set up on the day. We've gone even higher, so now we've got a full fill, because this zone should be marked about there, a full fill of this imbalance. Okay, so we've marked out this zone. We haven't marked it from here. We've marked it from that full candle. We were able to watch what's happening. Now I expect to see a push lower from here. Okay, so we've got a push lower, and we've gone into that area of demand. So that is how I look at price. Okay, you need to understand these zones. So at the moment, we've still got a bullish bias, and potentially we're looking for a reversal go to the upside. At the moment, we haven't got another continuation candle. Nothing yet, no. And that's our first sign of a continuation candle. There we go. That's our first sign. So you look for the market to come back into there. We've got a 50% test. We are still bullish and we're still looking for a run to the upside here. So we're looking really for this strong low to hold for the market to go back up for this week high. Based on our swing structure here, we're still bullish, but we're reading the current direction is still bearish until we remove this zone. Okay, and eventually we have actually removed it. So now you can see that we've just closed through this zone, which invalidates, and now we wait to see if we get a new bearish candle or bullish candle to go with that marking. And that's actually the current price. So now we're just waiting for a new candle to form to show us that momentum so we can draw out the area of imbalance. Then we can go down to lower time frame to look for a trade. Now, as we're at this area, let's have a look to see what we would have seen. Let's mark it out at this area. Okay, on the chart. And let's mark off the high. The most closest potential trade we could have caught. Okay, let's see what we would have got here. Let's go down to a 15-minute chart. So this is the area we're looking at. Now, the first thing we've got to do is look for where prices come out in this zone. And what I'd be looking for is those swing highs. So we have a swing high here. Okay, so a swing high has been formed here. And this would be the 50% of that actual zone. So we have a swing high here. We could actually take the 50%, but we're looking for those areas of supply. There is my area of supply on a 15-minute. So this would be my area I expect price to want to come back to. Now we failed to come back there. We've just tagged the market there. And we come deeper. We then actually come deeper again. And you can see that we would have caught a trade here. And at that point, our low we've been targeting would have been here. So you can see this trade. And if we're taking a sell here, now whether you had caught the trade here, which you could have done, and went deeper, your target would have been here. And we've hit just over a 3.5 to risk to reward. So not a bad trade. Yes, it did come back as we saw, went higher. Okay, but we never would have been stopped out. We'd have already been out of our trade for that day. We did see this sweep above this high, which would have swept you out. But at this point, remember, we're looking at this move through the zone. We have nothing there we could really trade. This is the main area of supply. We see what pushes through this zone. We have this bearish close. This is more of an area of the indecision at the low. You want to see this high run, obviously, which we did. And even if you did take a trade here, understanding this was a run through this high, we had a sweep, we had a break of structure here, okay, and a pullback into this last buy to sell move. If this was your sell and you had taken a sell off here, not the best area, but it's still a valid sell for the 50% area. Your target would have been potentially this low. Okay, yes, you would have had a losing trade. Okay, very close to hitting your target. But once you saw the break, okay, understanding risk management here, you saw this break to the downside, you would have moved to break even. So the worst this would have been is probably a break even trade unless you took some profits off on that trade. So that is how I would look at then going down to lower time frames to capture these types of trades. And if you're actually following price correctly, what's just happened there? I don't know. Let's move back. You would see there was another push up, okay, above this zone, which is going through this swing high here. Then the market, okay, we look at price, we came back down, we broke this structure. The last buy to sell move is really here, and we never actually got a pullback to the area. Okay, we did have a pullback inside the imbalance, which would have been this zone here. Left over, we got a little push in, and then we did also have this last buy to sell move area here, where price did react off, okay, and came back in, and we saw the push for those lows, which then would have been this low here. So there was a potential trade you may have caught, understanding that this is the area broke structure, and we came back to, we did sweep those highs, okay, and then it fell to downside. Now, we never came into this area of imbalance, so personally I wouldn't have taken that trade. I'd have rather had a push above this high into this imbalance, then look for the sell. So that's how we look at using that imbalance zone. Remember, forget what else you've seen out there. This is the most profitable way to read these imbalances. To go with that daily time frame, use a 15-minute entry chart to target those areas. Now, if you want to join up to that free community, you can by clicking the link that's coming up right now.